What's going on, guys? Welcome on in. We are currently looking at some insider sells by Elon Musk, but we got a bigger story to talk about here today in the stock market. Look at this. The VIX 3267 as we speak. Dow down 600 points. It looks like the end of the world. Let's take a look at what's going on. We'll jump over to the Elon stuff. We'll talk about that in a second. But yeah, look at this. The Dow down now 700 points, down over 2%. Nasdaq, things are just bleeding off into the close. It just seems like as we speak right now. Nasdaq down almost 3.5%. S&P down nearly 3%. We're back to the crazy range. But what's really interesting, and I think there's some key points to be made here. We're coming down right into the lows that we saw back in March. I mean, we did hit 409, yeah, sure, but we're coming down right into that same zone. There was a lot of similarities between the past couple of, I guess, substantial bounces. So if you go back to January from this time period, you'll see that we have quite the range, even for like 5 trading days after we bottomed. There was, whether the bottom is today, tomorrow, last week, whatever, what I mean? The reality is that there's going to be, there usually is a lot of volatility here. And the past couple of times, we've seen the range. So, I mean, if you go back to this time frame, even the days after that crazy, wick day, range from 426 up to about 438. So we had roughly 3% range, each of these days, from top to bottom, from high to low. In terms of the daily range on SPY. And if you look at some of this range right here, this day right here, we hit that 409 low. We had about a 4% range, which is nuts, a little over 4%. And then similar kind of situation here, there's some pretty big ups and downs along the bottom from March. So, you kind of expect it. And what do we see? And pretty much the same thing. We're in this range right now from about 430 down to about 415. It looks like we're trying to break below 415 as we speak. So we'll see, the next hour how things end up shaping up. But it is pretty nasty. SPY coming down and some key supports for sure. I'm contemplating grabbing another SPY call that I have out to June. I started buying these around 420. They're down, 50% today, obviously, because of yesterday we closed, way higher. So I'm probably going to, depending on how we close, I'll probably grab one more of those. But the core of that I wanted to actually add. If we really flushed below this low and really came down, under, let's say 415, 410 type of area, we flushed below that, that would have been where I was going to go. I thought maybe it could happen. The reality is that the earnings was kind of mixed this week. It wasn't like all bad. We had some good, we had some bad. And so we had, the freakouts and we had whatever. So it was kind of choppy and we kind of, somewhat to a degree expect something like this. Here's SPY though, but look at Amazon. Amazon down over 15%. Let it happen. Let it happen. Let it do it. And let it do its thing. We know Amazon's not going anywhere, but this is a massive just drop down. It looks like Amazon could be headed down towards about 22.5. 22.5 could be the spot. That's the next spot we have. We had 2,500 was our spot right here. We broke below that. So Amazon looking pretty nasty. But Apple, that said, Apple's down 2.5% roughly. But look at Apple based on the range it's been in the past couple of days. It's not even remotely close to the 155 lows of a couple of days ago from Wednesday. So Apple's actually holding up pretty decent, and Apple's lows from March were down here to 150. So Apple's actually holding up, a lot better. The earnings were really, really good compared to Amazon's. So there's that. The thing about Amazon, which I completely forgot about, looking back now makes a lot of sense, was the earnings that they had, the Amazon earnings yesterday. They've been reporting at least past couple earnings, their stake or their, P&L essentially from Rivian. Now, if you go back to the last earnings cycle, back, I think earlier this year when they reported, Rivian was trading way up here, up in the 70s, something like that, wherever it was. But Rivian got rocked and it's gotten destroyed. And Amazon, owns whatever they own, however much, and they lost like $7 billion or whatever the number was with their Rivian stake. Now, again, it's like unrealized losses. So like, is it even worth, stressing over? I don't think so, but it was still reported on there. And because of that, that was something I remember back then thinking about, like, yeah, that could be a really big player into the next earnings, because it seemed like the reason why the last earnings held Amazon up was because of their stake in Rivian. But now that Rivian's getting killed, boom, didn't connect those dots. So that's why it's important, I guess, to keep some notes. But also, you're not going to see me play an earnings report anyway, so it didn't really matter. But if you were to play like an earnings report like that, that could have been a good potential play. So these earnings lottery tickets that some people may have taken on the put side, let's see, what do we got on Amazon? Let me go find around. Yeah, look at some of these around the money right here. a lot of contracts, depending upon which contracts you bought, up 500%, a couple thousand percenters, pretty crazy in a day. So, obviously when you get an outlier move of 15% on an Amazon, yeah, it's going to happen. So what's going on, Kyle? What's going on, guys? Let's see. You know what? Here in Austin, Texas, the past couple of weeks, honestly, weather's been really iffy. It's been just like, it's not been bad, I will say that, but it's been just like cloudy pretty much all day. Then come like 3 p.m., then the sun tries to come out, and it's like, well, you could have come out all day. It could have been a nicer day, but hope everyone's doing good. Hope weather's. I know my brother's up in Montana for school. It's literally snowing there today. Like they've been getting snow. The ski season out there, went way longer than they really expected. So weather's been kind of crazy across the states as of late. All right, I do want to mention a couple other things. Let's jump over to, so the VIX obviously is up a lot. We know this historically does not stay up here. Let's look at the VIX on Webull. VIX. Let's see. Yeah, we know it actually stayed up here like it's had this chop couple of days up and down, whatever, but it historically will not stay this high. We know that's going to come down. So now that it's holding up, this actually, offers the idea for the SVXY play that we've been talking about. Yeah, you know what? This could be a decent play. Let's see if we can find some options on this that make sense. Maybe I'll take a piece of this instead of the SPY call. I could buy a SPY call. Maybe I buy one SPY call to average in on that, and then I buy one of these two out to May. So the spreads on these are not great. So the May 20th expiration is not that great in terms of spreads. The 50s are the best. Let's see. Yeah, there's 300 open interest is not bad. You're not going to be able to get a ton of contracts here, but for a couple $100, you can play this, as a possible, 100% type of trade if volatility gets sucked out of the market a bit in the coming days. So that's what I'm thinking. Let's see. Let's go to like a May 13th. What about these? Are these any better? No, there's even less open interest on the May 13th. May 27, even less. So May 20th is going to be the option contract we're going to look for here. It looks like. Let's see, June 17th. Anything on June 17th on these guys? Let's see. And I'm looking at like the 50 strike. Yeah, you could go with the June 17th, I guess. 50 strike on SVXY. This is going to cost you a bit more, but there's a lot more open interest, so you could play that too. That could be a much safer bet, in my opinion, so you can play that. The spread's like 35 cents on those versus a spread for May 20th. May 20th is still like 3 weeks out, so it's still not bad versus about looks like a 25-cent spread on the May 20th. Let's see. Let's see if I can get filled on that. For like 2 contracts, and just in case obviously if we wake up on Monday next week and the market there's panic across the board, then maybe it's not a bad idea to average in. So I'm not trying to overextend too fast, but these May 20th could be decent. So these were going for we had a 185 on the ask, 160 on the bid. Means that we got to get to about $52 to go green on this, a little bit shy of 52. So let's just look at the chart. Can we get to 52? 52 would be right here on SVXY. 50 estimates, it'd be right here. I think that's very reasonable. And we saw this thing went from 57 down to 48, in a span of like a week, pretty much. So, or week and a day. So I like that risk reward, especially with volatility or with the VIX over 30. So I'm going to see if we can get that fill now. Okay, let's go to these guys. I want to pull these up on the order entry. And 160 by 185. Let's just go with 2 for now, and let's go with I'm good with like a 175. All right, 175 average is fine. Let's see if I get filled there. I feel like that's decent. Yeah, maybe it's not. Maybe it's not going to fill. I'll leave it up, and we'll see if we get filled. We'll come back to it. If it doesn't get filled, maybe we'll try the Junes before the close, but I'll see if we can get it. Obviously, if we flush a little bit further, that has a better chance of getting filled. But I'll hold that on there. I'm not going to be greedy on this type of stuff. Just let it play out. If I don't get the spot that I want, then I'm not going to overpay or be stupid on these spreads. So that's that. Rivian should have been priced in. It could have been. I don't know. I feel like that was what freaked people out a little bit when they saw the numbers of, if we go back to those Amazon earnings. Let's see. CNBC. Let's pull it up. Amazon shrinks 15%. Here's the thing. Yeah, here it is. So Amazon recorded a $7.6 billion loss on its investment in electric vehicle Rivian, which lost more than half its value in the quarter. I don't know. That obviously was known. It wasn't like that was unknown. But I feel like this contributed to a big part of their loss. If you look at the rest of their numbers, if we see from what I was looking at, loss per share 756, nearly 16 shy of the street's earnings per share expectations. Scrolling on through, I believe that was like a big piece to overall the numbers weren't terrible, except that was pretty bad. And then some forward-looking guidance wasn't looking great either. It's more so, I would say, the forward-looking guidance, but I don't know. A lot of things play into that, and this is, a headline everyone's looking at and, freaking out about too. So it adds to that. Okay, we got filled on those SVXYs now. So those got filled, and SPY pulled back a little bit more, so that's why. Here's a 5-minute chart on SPY. So you kind of one of those days, right, where we haven't had any sustained bounce. Every bounce today, and just the trend, right? Every bounce has been met by, more sells. And so look at this. We had the VWAP. We tried to get going in the first couple minutes of the open, but after that, VWAP has been our resistance. We've been way, way off VWAP for a while. We're coming into really good risk-reward spot for a bounce, but basically touching this spot, 3 times this week alone, it's weakening this spot of potential support. So I don't know if it's this spot that doesn't necessarily have to hold. It's not like a big deal in my view in the very, very short term, but we'll see. The bigger picture is the bigger picture. The fact that Amazon dip is not being talked about, yeah, it's kind of funny. I mean, it's it's down 15%, so that's massive. For a stock like that to be down 15%. Good time to add long term, do a spread. Yeah, I could do a spread, but I don't know. I feel like what is it? SVXY here at this 175. I feel like those are just fine, and I'll honestly look to grab another SPY call here too. Maybe I'll grab one of those now. Let me just grab one of those. I had 5. I want to get up to 10 max, so I'm leaving room to do 10. But let me grab one more of these. And what is it going for? 87 cents. That's pretty good. So my average is, the funny thing about these SPY calls too, look at this. Here's a 15-minute chart. Look at this. Yes, I could have gotten out of this. I had a 144 average. Now it's 134 after I just bought that one more contract. I could have got out yesterday at almost 230 a contract. So those are up a lot. But you see how volatile it is. These are June, so I got a month and a half on these. So I'm not really, I'm not playing for if I look at SPY, I'm not playing for this chop. I'm playing for a much more of an extended move up, maybe up towards the 435. Then I'd be looking to take the profits on those. That's the intention. They're 460 calls, so the strike's way out there. But because I have so much time, I'm not really too worried about the time decay right now. If we were to consolidate in this 415 range for the next 3 weeks, then yeah, obviously the time decay will kill these things. But my guess is that we don't do that. Either we're going to go down substantially more, or we're going to dip and rip, or we're going to bounce. We're going to get a substantial move based on how volatile things have been. I just highly doubt we're going to just sit flat for the next 2 or 3 weeks. There's no way. So what's in store for next week? Again, I don't know what's in store for next week. We'll see how this plays out, but the sentiment is pretty bad. It's pretty bearish. We talked about this yesterday, I think, too. It's the most bearish we've seen all year, and I think it's the second most in the past decade and a half, something like that, or it's up there in terms of sentiment. It's the last time you get more bears, at least in terms of sentiment, based on this investor survey. You got to go back to 2009, and if you go back to 2009, that time that it happened was in the first quarter of 2009, when the stock market bottomed in early March of 2009. We'll look at the chart. It bottomed in early March of 2009, and then SPY returned 60-something% after that. So obviously every year is not going to be it's not going to be the exact same situation. Yeah, I understand. And we can rewrite history, and we are rewriting it or we're writing a new chapter essentially, as it is. But that's what happened when sentiment got that nasty. Sentiment was super nasty first quarter, and guess what? We saw that bottom in March, and then we again back then too broke below the lows. Broke below these lows, got pretty nasty for a couple days, couple weeks actually. And big picture, looking back to the left, we had these lows from 2002, and you're looking back, wow, we're going to break below 2002 lows. People freaking out. We did that. Supports didn't matter, and then we bounced and rebounded massively to finish out the year. When sentiment got, ultimately some of the bearish it's been. So that's something that I'm looking at. That's what I like to see, at least across that front. And I like my odds essentially. Big picture though. I'm not looking at day to day. So day to day will do its thing. You can get all excited, or you get upset, or you get all worked up. But that's just because people are getting emotional about the day to day. So let's see. Tier and Q quarter report came out today. Is that earnings? They bought. Let's take a look at GRNQ. I'd imagine it probably is. BAM SEC. Let me just look at BAM SEC for GRNQ. Shelf registrations, amended shelves back then. Non-reliance on previously issued financial statements. What is this? This is what happened yesterday. The company's management together made a determination that disclosure should be made on, and action should be taken to prevent further reliance on companies previously issued unaudited, condensed, consolidated financial statements for those 3 months. The restatement will be as follows on the Form 10Q. Okay, so they just cleaned up some numbers. I guess they're cleaning up some numbers there. The following form should no longer be relied upon because it was an unaudited form, it looks like. I don't know. How is that thing setting up? Was there a reaction to it? No, not really. It's not really. It's still doing. They're just sitting flat. Like a lot of stuff. Let's check on. I'm gonna check on Grill. How's Grill doing? I'll be back. Oh man, 40 cents, man. I'll probably be here soon. You know, if things have got to turn around a bit, and this is gonna sit nice and quiet for a bit. If it stays like this, yeah, good. The thing, if you look at small caps, you know, we have this one. Let's see. We don't really have too many. This is an IPO. VAX is ripping today. It's up a nice 9. It's up like 100%. That's a good amount. RDBX, there's some good play. RDBX, look at that chart. You know, building, and then boom, squeeze out, move here. LEJU, got some decent movers. CYN, look at this one. Higher lows just never died. Squeezing a little bit. Yeah, there's some decent moves, but not really across. You know, you got to have news on the small cap side of things, which is why I'm right now down to like 2 or 3 small caps. I've kept it pretty minimal. There's not much volume on a lot of these things, like the spreads or whatever, kind of nasty, but you know, holding 1 million small caps is just going to bleed you out for now. There'll be so many opportunities again. When things turn, there'll be many opportunities that you'll be able to get your hands on anyway. So I'm not like super worried about that. When the time comes, and then we can be, you know, more aggressive, I guess. People want institutions, banks, people to sell, especially retail, once the market's in total fear. No, that's just generally how it goes, you know. Generally speaking, how it goes, you see like the reality is this, right? When you look at your portfolio every day and you freak out, you're going to be so much more emotional. But when you look at that stuff all the time, you're setting yourself up essentially to have those situations of those times of panics. And when you do that's, you know, giving the big boys the ability to scoop up. When you don't care about money, when you don't care about how much, you know, you're going to toss money away and this and that and forget about it for a while, and you're going to get your return, you know, whether it takes 2 days or it takes 6 months, takes 3 years, whatever it is, you know, on some of these names, on some of these stocks, you know, it doesn't matter. Like these big boys will do that, and they don't really care. Like most people are looking at like rent, and they got to pay rent, and they got to pay this, and they got to pay that, and they're thinking about how this trade is going to impact them on that front. And that's how people get in trouble. Look at this though. We're extending below. I mean, this is pretty nasty. Here's a 15-minute chart. Yeah, we're falling below the lows of, you know, the daily lows of the past couple of weeks or past couple of days. The 413 is the after hours low that we saw a couple of days back after earnings. I think the first day, was that Tuesday? Yeah, this is Tuesday afternoon. So 413 is the next spot to watch. Below 413, yeah, you're going to have 409 as your next spot after that. So again, why 409? If we go back in time, 409 will get you right down here. I'll just draw a line there roughly at 409. Actually, why is it not showing up? Let me go back to this. 409 was the daily. Oh, the chart's all wonky. Chart's getting all wonky here. 409 was the daily low from, let's see, what's the date of that? That is the 24th of April. Of February, sorry. We're in April now. 409.37 is the daily low. So that's a spot. That's the next spot, I guess, if you want to look down below this 413, which we honestly, at this pace, it's getting pretty nasty. We legitimately may be testing that 413, like, you know, in the next 45 minutes, because it's, you know, we're down $13 today. Are we in a stock market crash and we didn't know yet? Hey, we're not necessarily, stuff's been just downtrending and stuff's been getting hit for a while. I wouldn't say it's necessarily a crash. Is more like the pandemic where we have more of a flat, you know, when you have those days where you're limiting down, you know, that's a crash. I wouldn't say this is really a crash. It's some pretty nasty days. I guess you're honestly like halfway there to a limit down. What is it, like 7%? We're like down 3.5%. You're almost technically at almost halfway there to a limit down scenario, but usually you're not going to get that unless there's some news driving it most of the time. And right now, I just there's a lot of the news we right now. Maybe there's the Ukraine news. I don't know. Maybe there's some more news that comes out over the weekend there that is pretty nasty, and that feeds into something. But yeah, that's that. June 30th, 459 call at this level. I do like that. It's out. You have to understand too with some of those calls, like, yeah, could we get there? Could it go in the money? Yeah, sure. But the reality of those is that most likely it's not going to go in the money. But those are the out of the money option contracts will be the biggest ones to snap back. If we do snap back in a decent fashion. So if the market snaps back next week or the week after that, anything in June, any contracts for June will do very, very well, which is why I like the June timeframe. So that's what I'm doing for the SPY play. Nothing crazy. The rest of my contracts I actually use this week. I'll talk about tomorrow too. I use this week to roll things out to like November's to September timeframe, January's, roll some stuff. So there's no time issue here of, okay, I got to worry about, okay, if this doesn't happen by this date, I'm screwed. I let it have a lot more time to figure itself out. Is it worth the whole options of the weekend for monthlies? Close to the money. It depends on what you on your thoughts on that. SPY 410. It's possible, but I don't know. That would be a lot. It could happen. It's a lot though. As it is now, it's a lot of 3.5%, whatever the number is now. Nasdaq's down over 3.5%. That's a lot. That's a good fat dump of a day off of just really the back of an Amazon earnings that were pretty nasty, and then obviously Apple had earnings, and then I guess there were some fears out of China for the future. I think the thing with Apple is that looking at their earnings, they keep beating. There's going to come a time where they're not going to beat. Now, I don't think it's going to matter in a certain market scenario where the market doesn't really care. But if Apple, if this just so happened to be the quarter that Apple just doesn't beat on a bunch of those categories, this could have been a much worse day. We're talking maybe 5% type of down day for the S&P. If Apple had a really nasty time. Meanwhile, though, Apple really quick is actually holding up a lot better. It's actually only at the lows of yesterday morning. The lows of the week, Apple was down to 155.40. It's not even, it's like $4 off that. So it's still actually holding up quite well. Generally speaking, it's not, up, obviously. It was up earlier, but big picture on Apple, it's actually down towards the relative lows of the past, couple of months going back since November. It's been a pretty good spot right here. Anytime it drops below 160, it's been a decent buy going back to November of last year. So we'll see if that trend continues, obviously. But never hold to expiration. Oh, holding to expiration. No, yeah, I wouldn't hold into the expiration. No. Unless you're looking to try to get exercise, I don't want to do that. I don't really care. If you're deep in the money, maybe it makes sense if you wanted the shares anyway. But just for me, it's like, well, if I'm going to trade options, I'm trading options to make money off the volatility of the options, not to actually get the shares. So I don't care about the shares at the end of the day. If you're going to sell puts, if you're selling puts, and I want the shares because I sell a put option, and I think we're at this is the time to sell puts, because the puts are going to be pretty expensive because you got the volatility at, at very, very high levels. If you look at the VIX, over 30 is really good on the VIX for that volatility to be, factored into the option contracts. So let's jump around to some stocks. Let's go look at some stuff. So for example, I know SoFi is a stock that a lot of us have, looked at in the past and be like, yeah, this could be a nice play. SoFi at 625. Let's look at the puts. If I was to go and sell, obviously this week it's already Friday, so it's not worth it. If I went out to next week, I could go ahead and sell some, let's see, where are the puts at? I can go ahead and sell a $6 put, and get paid $20 to do so. I can go sell a $5.50 for $7, $6-7. It's not that much, but if I went and sold a couple puts and said, hey, if I get exercised, and I get the shares, for every, option I sell, if SoFi closes next week under 6, okay, fine. I got paid $20 and I'm going to get my shares assigned at a $6 cost basis. If I want them this low anyway, it's, get paid to do so. So you can play that way too. So that's not a bad idea. or even, sell, puts like around the money, a 650 put. If you're willing to buy at 650, you can get paid, a decent chunk more. Or if you expect a rebound, and this is the time to be selling puts too, and then you may never actually get filled. And if you don't get filled, who cares? Let it do its thing. Meanwhile, PDSB, by the way, is an interesting one. Look at this stock. We've been talking about this one for a little bit. It's actually been holding support very, very nicely this year around the $5 area. So it's been bouncing and holding up. And this week, surprisingly too, with all the volatility, look at how it's been holding. It's actually a very nice risk-reward play, in my opinion, with the $5 risk. So this, first target I'd have is up towards like 650, or this trend line, however long it takes to get there, and then risking it to 5, and then ultimately looking for a bigger picture move for a breakout of that trend, but of that downtrend. But this is a small cap that's on my list. It's up there. It's pretty high up on the list. We also have some good play. I mean, there's some stuff up. Roku's up today. They had earnings, I guess. Tesla's up today. Oh yeah, mentioning Tesla really quick. Pretty choppy stuff. Yesterday was a pretty nasty down day, and then it recovered a lot of that. So Tesla came down almost to $800, 820-ish, and then recovered. Now it's $885. So if you look at Tesla really quick, why was it down? This is a speculation that some of us had, and it made sense, and there's the answer. So Elon was selling on the 26th, 27th, and 28th. He was selling shares, and he sold a couple $1 billion worth. So again, in terms of his own position, like his overall, it's not much. He sold like a few percent of his position in Tesla, and he sold some around in the upper 800s, low 900s on average, actually at 950 here. That's where he was selling, but he was selling. So if you were like, well, why is Tesla super heavy the past couple of days? Makes sense. Now my guess is that he's not selling today, because if he was selling today substantial amounts like that, obviously there's a lot of volume on Tesla anyway. 24 million. Okay, well, 24 million yesterday, for example, 41 million shares were traded on Tesla yesterday. He sold, let's see, what is he selling? So he's selling, what is that? Like a couple percent of the overall volume. It's a decent amount. He's selling 1.5 billion shares on the 28th. Actually yesterday alone, he sold like 5 billion shares, 6 billion shares, something like that. Yeah, so he sold a lot, 6 billion shares out of, 6 million, not billion, about like $6 billion, 6 million shares, out of yesterday's entirety of 41 million shares being traded on the day. What is that percentage wise? 6 divided by 41. It's like 15%. He sold, he was selling 15% of the volume. So that's going to be some pressure. That's added some added pressure. And if he did that in the morning hours, for example, yesterday, go back to that, then the market rebounds and it all gets bought up. Where's yesterday on Tesla? Oh yeah, here it is. If we sold in the morning hours, that all gets bought up by the afternoon. You can kind of see the pressure was really on come the open. Looks like he could have done it once the market opened yesterday. So makes some sense, but that's what he was doing. You feel about HUFV? Yeah, I've played it in the past too. Let's take a look. Opening in July, maybe that'll have a bounce. That's true. I haven't been following what they've been up to. But if they are opening this year, that's going to definitely have a bounce. Definitely going to have a bounce. Here's another spot. Here's the low of March. So right now, the risk reward, man, it's new lows, all-time lows here. This is what is this market cap? Market cap is 88 million. We can take a look. Let's take a look while we're just chilling here. Seeking Alpha. Let's go to Seeking Alpha, HOFV. Important business update is what they released yesterday. They closed a $4 million loan, obtains necessary approvals to move forward with a $3.2 million in property financing. Okay, cool. Yeah, they're scheduled to open July. This is actually going to be a good idea. I mean, I do like that play. I don't know how much. Let's see how much cash. Let's go to their last earnings report. They're releasing earnings on May 10th, so that's going to be key. So let's watch. Maybe you keep it on your radar, and May 10th is the deadline to see, okay, what's the earnings looking like? But let's see if I can find the last ones. They announced, here's the fourth quarter results. Let's look how much cash they got. I'm just kind of curious how much cash they got. They have cash of $17.4 million, so they have a lot less cash than what they had about a year or back in September 30th of 2021. They have three factors: increased capital expenditures related to construction activities, expected decline in cash from operating activities, and paying down substantial short-term high-cost debt. Okay, fair enough, makes sense. Let's just see how their next earnings comes out and see how much this cash has dwindled. If that cash is down a good bit more, then there could be a threat for an offering here. But the reality is they're probably not going to do that anyway until they spike the stock. So this could be a really good play. No one's thinking about it right now. It's nice and quiet. Going into July, that's your time frame. Play it into the opening. It will potentially get a run-up in anticipation of that. So the question is, when that run-up begins, it's going to have to do with the overall market. The market stays pretty choppy and stays pretty nasty. It's not going to probably move. But if that changes, this might start to get some attention, some volume going into that July time frame. So I kind of like that play going into July, going into the beginning of football season. And now with the draft going on, that could potentially start sparking some volume here. Let's see if there's any noticeable increase in volume. There's a little bit more yesterday than usual, but not really too much. So this thing is in an accumulation range. They don't have too much cash, so I'm not like super like, oh my gosh, I love this. But I do like the idea catalyst going into the opening. So I do like it. And I've played it before. And it's had some good runs. They also are tied to NFTs a little bit. This runs with some NFT names. This will run with, I believe, with some good football news related to that. So I mean, the draft time kind of makes sense, but right now is a bad time in the market. I'm checking back in on NVOS, by the way. This is another one that I was in, a while back, had really nice gains on it, but it's actually quite interesting. It's kind of just chilling here around this $2 area. If it holds over $2, honestly, might not be a bad idea for another attempt. I'm fine with what I have for now, but it could be setting up for a possible, next run, or really, honestly, just a spike on news is what I would imagine you're going to get. Okay, let's look at SPY. Let's see if we get any buying into the close. About a half hour to go to the close. We're in this zone. We're in this band of our support zone. So, going back this year, it's been a good spot. We're at a pretty nice risk rewards on the support side. So we're in this spot that we came down to roughly back in March, and we'll see if we bounce here. The thing that we've been seeing is that we've been bouncing on some of these lows, like the weekly bottom, yesterday's low. We bounced pretty nicely at yesterday's low. So if you go back to yesterday's low, down around 417.50, we came down there and bounced from that 417.20 area today up to almost 420. Very, very nice. We popped that high. So there were some individual intraday bounces, but nothing's been able to sustain itself. That's the key. Let's see. If Apple took a dump, then we'd be at 410. Yeah, for sure. It would be nasty if Apple dumped. Meta materials started off strong today, right back. Yeah, I mean, everyone's saying it's shorts. Let's see. No, it's the market is what it is. It's the market. You probably have a short algo in there. I wouldn't be surprised. You probably do. Because look at the bid and ask. You got, you got 43,000, share bid here at 119, and you got a 59,000 at 122. I mean, I highly doubt that that's somebody sitting there. I just an actual physical person. My guess, not my guess. When you have barcoding like this on the chart, it's most likely an algorithm. So you probably have an algorithm on that is just snagging it at 119 or whatever, 120. And then selling at 121, and then they're just kind of recycling shares kind of back and forth, and that just like makes a few dollars throughout the day. Like it's literally how it works. And so when you do that at scale with thousands and thousands of tens of thousands of shares, I guess you can do some damage there, make a few bucks. Not going to make you a ton of money, but that's what happens. Here's the chart on this thing. Let's look at the bigger picture on it. Yeah, right down to new lows. 115 was the low yesterday. Broke below those supports, not looking good, and now it's showing to be, for now, it's showing you the signs of, the prior areas of support or resistance. We could like today, we tried to get over 130, couldn't do it, or prior support, now resistance. So this box is acting as resistance now the past couple of days. So it's just recycled. It's just like these everything is just working so nice. Just if you flip the charts upside down, it would look very nice to the long side, but we're obviously we're looking at the short side, and these things have just been, respecting, falling below supports, trying to get back above, finding the prior support to be resistance, and then going lower. It's been what it's been doing. Same thing in the SPY. All day today on SPY. Same thing. All day on SPY. Well, it tried to bounce right here at 419, pushed up, VWAP rejection. Also, why is that a key spot? Well, look where it got rejected. It got rejected going up into the prior support from right here from pre-market. Then we came down even further today. And where do we bounce up to? We bounced up, came up, got rejected at the prior support from this point. So you see how it's just stair-stepping its way down, obviously to different degrees. Like you'll have days where it's not as volatile. You'll have days where it's more volatile. But now we're down 3.25% on SPY today. Look at this thing. 413.90 was the low from a few minutes ago. Looks like we're about to break below that and go even lower. The SPY trade super stressful. Hey, if you made money, it is what it is. That's nice. It's a good sign, especially in market like this. If you come out green, you're doing better than the majority of people, because most people are invested anyway longer term. So you're making money and most people are not. Put credit spreads are really the way to go right now. Super juicy. No, it's not a bad idea. That's definitely not a bad idea, especially without how juiced up these puts are. Just as the same thing. Look at it this way. If you're going long, right, you want to sell covered calls and get the best bang for your buck on the long side. Well, you're going to want to do that when the stock is up, when stocks are up, when the market's up, right? I didn't think today. I mean, for a period of time, we did look like we were trying to hold higher lows. Honestly, it was like, oh, maybe we'll hold higher lows and we'll see. It was kind of showing us that this is what we're setting up as. And that broke down and we went down in a massive, massive fashion. So now the question is going to be, do we have the same situation as last week? So we finished off last week. Let's look at last week's close. So Friday of last week was this red candle right here. So let's see. So Friday of last week, we closed down at 426. We opened at 424 or 423.50. So we did gap down slightly, but then we actually went green on Monday, even though we dipped even lower. So this could indicate that, with that based on this close, my guess is that we're probably going to open lower. So I would be looking to save that powder, any powder I would have for a gap down opportunity on Monday. Is my idea. If I was going to play anything like the June SPY calls or the May SVXYs. Here's SVXY again really quick. 48 is the spot now. I might grab one more of these, but outside of that, that's what I'm going to just sit with for now. Let's look at these guys. What are they going for? I'll see if I can get filled at like a better price. Let's see if I can get filled 165. Can they do they do individual? Yeah, they'll fill me at 168. Let's see if I get filled there. I'll put a 168 order on that and see if I get filled on that. If I do, great. If not, whatever. No biggie. I got two, and I'll leave the rest for potentially a Monday opportunity. But yeah, we're coming down. We're coming down to the lows. Let's look at QQQ. So look at SPY is looking pretty bad, right? SPY down a little bit, almost over 3.5%. QQQ down 3.8. QQQ, oh, it's still there. It's still in range of the 315 spot from Wednesday. So Qs are not terrible. The low from what was this, Tuesday afternoon did dip in the after hours to 311.88. So we did come down that far. So we do technically have a little bit more room down on this thing to test this week's lows, even though you're not going to see it on the daily chart. The low of this week actually came Tuesday after hours, after some of the first reports of earnings, after Microsoft and Google. And that was kind of the same situation almost as Apple and Amazon, where Microsoft beat. Google did not, I believe, or Google was a little bit choppier. In this case, yesterday we had Apple beat and then Amazon did not, essentially, and guided lower. XBI isn't. No, you know what? I think yesterday may have been that. Well, we'll see. Obviously, I don't want to get ahead of I'm not going to sit here and say, oh, those are the bottom. I mean, you can try to call the bottom for however long. You never know when the bottom's going to be. It's obviously just kind of chopping down, just with SPY and with the Nasdaq. Which is fine, but you kind of see how XBI yesterday's action proved me feel a little more comfortable on what I'm my Labu position. I did again. I'll talk about that tomorrow's video more, but I rolled them down, so I now have my expirations are I believe September for both of those Labu plays, which is fine. I ideally would like to get a little bit further out, but the contracts I wasn't a huge fan. Whatever the spreads weren't as good and the volume wasn't as much. I did roll them down though. So now I have strikes of $10 and I have strikes of 15. So if we look at Labu, right, those are both out of the money right now, but they're a lot more realistic. Obviously this morning we almost got back over 10. Yesterday we go from 775. This is the 3x ETF of biotechs. We go from 775 up here to 915. So this thing can snap around really, really fast. But either way, I just want to make sure I have the time on my side here. I don't want to have, I don't want to have to worry about, oh my gosh, I'm so far out of the money, the time decay kills me. Yeah, well, if and when we bounce it, then we have a really good upside here at some point, but I want to make sure that I have much more reasonable strike prices. So that's it on that. Those are probably the most risky. I think the 15s will be the ones that I take profits on more proactively, and then the 10 strikes will be the ones that I'm willing to kind of let them work more, because they're going to have more value, and if we get a pop back over 10, more intrinsic value. SOXL, I think I rolled these down to 25 strikes. They were above that yesterday briefly, and then they came below. It is what it is. But this had bottomed here a couple days ago, 21 on Wednesday. But these I got out. I moved these to November. So I moved the strikes and a lot of this stuff out to way out. So that's that. Let's see. Outside of that was pretty much like the majority of what I did in terms of rolling stuff. But HCDI, look at this guy. This is kind of an interesting little holding up. Higher lows the past couple of days. It's been kind of, I don't want to say it's been pumped, but I feel like it was one that popped a little bit and then has been holding decently. I do like them. The problem is that the market hasn't been too great, but they have a lot of, well, they actually had a spot right here that's going to be strong. Resistance $3 to be strong. They have a lot of real estate in some pretty hot areas across the country. So they've been, unfortunately, small cap environment hasn't been great for them. But this is definitely one that I could have seen make a bigger move if the market had been hotter for small caps, for sure, as of late. All right, let's see. SPY trying to hold the 413-ish for now. Just playing limbo on how low. Oh, yeah, again, with the XBI situation too. XBI, so the market was interesting yesterday. The market was... what was the market doing at the time? The market was like a little bit choppy. It was up a little bit, and then it went really, really high. But XBI was down massive. This was kind of like, I don't want to say it was your capitulation day, but it looked pretty nasty. It was down like almost 4.5%. And at the time, I think the market was flat to green. And I was like, if this thing is down 4.5% and the market's flat to green, what would happen if the market was red today? Would this thing be down 10%? Like, this is the ETF. It's a biotech. It's not even like it's an individual stock, right? So this has been a nasty downtrend accelerating to the downside. So we'll see if it holds up. My guess though is that I can't imagine. Well, no, I can't. I think it could happen if the market does keep going down. But this thing is coming down to some of the lows that we've seen back into some pretty nasty times. So obviously the pandemic, and obviously back here in 2018. And the snapbacks are pretty quick. So if you go back, it took like 2-3 weeks for these things to snap back. And the snapbacks from the lows, snap back here back in 2019 in 3 weeks. XBI snap back 25%. And then obviously the pandemic lows, this thing snap back in about a month and a half, snap back 50%. Bigger drawdown looks like for that time frame, but it can snap back in a hurry. So we'll see if this ends up being one of those similar V-shaped kind of bounces or whatnot. We'll see how it plays out. But that's what I did on, well, I have the Labus, so that are more risky than XBI. But the reality of the positions, at least I'm playing now, they're super, super volatile. So, you a day like yesterday, the portfolio, if you were to look at and just watch the portfolio value, the Webull portfolio value, you would have seen the thing go down, be down like 10, 15% on the day, and then finish the day up 6%. Like that's how it was. So when it's red, it's nasty, but when it's green, it could be, glorious. But, as long as you're stomaching that, it's fine. I think Monday could be a good day to go long. I feel like we've been saying that. You said that last week too. But obviously this week with the earnings, it's a sensitive time for the earnings. Let's jump over to oil. Oil was doing, oil's pulled back a little bit today. I was getting a little concerned with this because crude was popping up over 107. And like 105 is kind of my threshold of like, if it keeps these higher or these lower highs, like I want to see like it get rejected at 105. Over 110, it starts to kind of break out of this downtrend that it's been kind of in. Or, it's got higher lows, lower highs. So you kind of can see like the pennant shaping up, whatever. But 105 is the spot. So it kind of fell back below that. We'll see if this, how this plays out into next week. But this fell down to 104 now, so it's nothing too crazy. The 10-year did pop again. The 10-year still, let's look at the past couple of days in the 10-year, look at the 5-day chart. This has been a concern. I have been obviously concerned about this, but if we zoom ourselves out, 5-day chart, of course, Oh yeah, here we go. It's still struggling. It can't break over this 295, this 2.95. It has not been able to do so. It again got up to 290 today, but it can't really break above that. We'll see. This is something that I'm obviously watching. Still building higher lows. So now going forward, you want to see it breaking down below 275 for it to really kind of pull back. But this elevated is not going to be good for stocks for growth generally. So this is something to watch. It's if we kept the continuation of this thing, obviously earnings and volatility, but if this thing was down towards 275 like it was on Monday, Tuesday, if it was down there in the 270s, 2.7s, this and the market rebounded yesterday, and maybe we're looking at a different situation right now. Maybe the market's not taking as big a hit today, or maybe it bounced bigger, it bounced back even stronger yesterday and the day prior, and it holds up better. Maybe we're up like 420 right now instead of 415. I don't know. Something to think about, but that's been obviously on the radar too, and it's been holding up. It hasn't collapsed. It's still holding up there, but it seems like it's slowing down in terms of its ability to break out over this 295. So we'll see. That's the key. Okay. Looks like maybe a little rebound into the close. Maybe a decent idea though is to hedge things, is to grab a put into the close. Little QQQ puts or SPY puts or something like that as a hedge. If we do pop a little bit in the next 20 minutes, if we get up towards like if we are over 415 into the close, it could be a decent idea, because again, we're closing down towards the lows. The momentum would tell me that this has the looks of a gap down Monday type of situation, right? Maybe Monday's green, like this past Monday, right? This past Monday was gap down and ended up finishing green, but based on how things are closing, I wouldn't be surprised. Even though we are at support, it's a good hedge idea, because if we do gap down below supports, things can get pretty nasty. People could freak out as you see, oh my gosh, we're below this low and this low and this low. Oh my God, I got to sell everything. We're done. We're done for. That's the mentality you probably see. The play for SPY on Monday. Yeah, I mean, if I knew what SPY would do on Monday, right? Wouldn't I be rich? Right? Wouldn't we all? Obviously, I think we're going to gap down, but we are at a pretty crucial area from, I say, 410 to 450, like right where we are right now is a pretty good spot. It's been the lows of the past, of March, this area. So we'll see if we do fall below this. If we go lower, here's the next spot down here. $400 is not out of the question. I've been seeing people talking, oh yeah, 405 will be a good spot. I mean, I guess, but $400 could be the next spot below that, and then that could be the big threshold. If we fall below 400, you're going to have mass hysteria, panic, all that stuff. There actually is a gap too. Let me just draw these lines, and there is a gap down here to, looks like 397. So if we do fall below 400, a quick move to 397 would fill this gap on SPY. So that could be something to think about. It's funny because back when we were around, what was this? That's actually about a year ago. Back in, 11 months ago. 11 months ago, SPY was breaking up. No, more than that. Sorry, it was 13 months ago. SPY was pushing up around the 400, and we're like, SPY all-time highs. So we're going to pop 400. Here we go. We're going to break over 400. And it just had this massive gap up day where we had just random gap up, I believe. There was no news behind it, if I'm not mistaken. And SPY finishes one day 397. Next day opens up at 400. Albuquerque, New Mexico's calling me. Let's see. So then I had the next day open up pretty much at $400 and just, has never looked back and has never fallen below 400 since, really. So pretty nuts that we're back to potentially coming back to a spot that we have not seen on the S&P in what is that now? Like over a year. If we do go to 400, right? That's if we go there. No guarantees. We might get just down to 401, 405, 409 again. Who knows? But we'll see. Something just got filled. What is that? My SVXY. So SVXY got filled. Okay, so we have 3 of those now. I'm fine with 3 of those, and I'll look to maybe next week to maybe buy more. I'm kind of maxed out in terms of cash. I mean, this is the time that I feel fairly strong about the situation, at least on the Webull. It's a high risk, high reward account, so it is what it is. We've kind of fallen. We've moved away from a lot of small caps. I do have some. I will come back to them when the time is there, but I've kept it pretty minimal on those. Moved away from a lot of those and are playing some 3X, some ETFs, some individual stocks, a couple individual stocks, but some ETFs for different sectors. Looking for bounces. That's what we're looking for the next couple of months. Not about what happens next week. Could we come down right here next week and then bounce? Yeah, we could come down here and then next, based on how we've played things out, we could be back up here in 2 weeks, from there, or 3 weeks from there, 450. Also, something to note too, and this is where like I'm not going off of any emotional whatever. Emotions tell me to sell and get out and run away. But when that happens, generally speaking, historically speaking, it's a time to buy. But I'm basically going off the history of what we've seen. When sentiment gets this bearish, there have not been many times throughout history. 2008 was an exception, I believe. But there have not been many times throughout history where the stock market has been lower 3, 6, and 12 months out. Actually, over 90-something% of the time. There's a stat we looked at in the past, a couple of videos, there's past streams. Over 90-something% of the time, the markets are higher 3, 6, and 12 months later when sentiment is this bearish. So that's what I'm playing for. That's it. I know there's a lot of underlying stuff. I know that I know all that stuff, but that's based off what I'm seeing. That's what I'm looking at. And then my threshold is the 10-year. The 10-year gets over 3 and starts to hold over 3, and the Fed raises, 2 times at 0.5 or 50 basis points, half a percent. Then that changes things. I don't think it's going to happen, though. I don't think it's going to happen. We just saw the GDP was down, and the economy is literally decelerating. So the biggest thing with that is that we've priced in right now so many rate hikes, and you get all the talk about that stuff. I think the key, to be honest, is inflation. The key is oil. We need oil. Oil comes down, and then that's going to help a lot on the inflation front. So it will start to lower the pressure of hiking, or hiking larger, or hiking, they'll probably hike, May, half basis point. After that, my guess, if the current trends continue and oil falls back under $100, my guess is that we're not going to hike a half basis point in the next hike, my guess, based on the economy coming down. Because the economy, if you get GDP, what's the definition of a recession? Right? I think isn't it two consecutive quarters? I think it's 2 consecutive quarters. 2 successive quarters where GDP declines. That's what it is. So if GDP drops 2 consecutive quarters, we have a recession. So the Fed's going to be worried about that recessionary kind of risk. So they're not going to just kind of hike massively into a weakening economy, right? It doesn't matter what the stock market is doing. It doesn't matter what all that. So they don't care. They don't care about that. They seemingly don't care if stocks fall off, and so they're not going to come save the market right now. Definitely not. There's other things in place, and maybe the market, we got to go down to like 350 for them to even maybe start to mention it. But as we speak, look at this. Look at this, just straight dumpage. 413 now. This is we were talking about potential for a possible gap down. I think that seems very, very likely in my opinion. SPY getting crushed. Double top on QQQ failed. Rally back above. Closing below. PT 260 on QQQ. Where is QQQ at right now? It's at 315. I mean, anything could happen. But yeah, I guess double top right here at 370 or so. Now it's fallen below these levels. But it's funny too. If you look back in time, it's actually funny. You look back in time, you'll see like a lot of the same situations happen, right? People always see this and say to themselves, "Oh my God, supports are all breaking. It's panic time. Get out. Everything's done." Anything can happen at the end of the day. But this also, I have the inverse head and shoulders look too. But at the end of the day, we're the most bearish of the past year, and also one of the most bearish times since 2009, which is quite substantial. But even these like pullbacks, like some of these pullbacks, they look kind of similar. Honestly, if you go back to 2021, very similar pullback, and we dipped down here, not the exact same, but we dipped down to about 296, coming off the 335 or 336 high. So we had a dip down to 296. Pulled back 12. We're more than that. Pulled back 12% during that span. We pulled up back a lot more now. But like if you look back here, like we're cracking down this support, falling below these supports. And then things get saved. The support situation obviously is cool and it's good to trade off of, but it's just like anything else. It's not a perfect 100% type of play. It's not 100% of the time that works. So now on Qs, we could look down to like this kind of area right here, 310ish could be a spot. This 296 is going to be interesting. We potentially could come down to that if things get really nasty next week. We'll see. Market is slamming into the close. Weeble's calling me. Chinese stocks today. What's up with the Chinese stocks? How's NEO? How's NEO doing right now? Yeah, it's only down one. It's actually honestly holding up pretty decent this past week. It's only dipped down to the lows of this. It really didn't. It kind of almost filled the gap, I guess, yesterday, but it never really completely filled this gap. But you're still seeing on this, the lower highs, and like each time it tries to push up, it gets rejected. So again, like today, it tried to push up, tried to get back up over 18, and it just couldn't do it. Now it's back under 17. Just showing you that. It's just like just like you stair step up, you're stair stepping down on a lot of these things. Mm-mm. 260 is the 0.618 fib. Start from the pandemic lows. There's no time in history that America printed this much money. No, yeah, that's very true. Loading TQQQ right now for the Monday bounce. I think it's very possible all the things falling except Apple. I'm surprised Apple's holding up. Apple honestly holding up quite decently compared to everything else. Look at this. SPY. This is a massive red day. Apple's now down 3.8%. So it's really flushing now. Look at this. We got 10 minutes left. Look at how nasty this looks. SPY coming down 412 now. Just under 412 hit. This is nuts. Nuts. Jeez. This environment though, you're gonna see massive swings up and down like we've been seeing the past couple of days. So you have a day, right? The thing SPY goes from 426 down to 416. Next 2 days later, you're back at 429. The day after hitting 429, we're at 412. Like you can't make it up. It's nuts. And it's not honestly like certain spots are working, like some balance areas, some is working. But it's very difficult. Like if you're trying to play some of these option plays, obviously if you're playing puts, you're probably green, right? But it's difficult in that sense too, because 2 days ago, it was like freaking out. Yesterday, you're freaking out on the bounce. So it depends. If you're just day trading it, it's different. But if you're trying to play like swings off of short term, you're getting like weekly swings. Oh man, you're asking for it. Snacks. I would say, to be honest, at this point, my guess is that this fear. Who knows? These types of situations are hit or miss. When you have such a weak close, yeah, you would think on Monday, right? You'd think Monday we gap down. You'd think you look at futures come Sunday night and you're looking at like red, disgusting, like you're gonna get rocked, and you would think we probably can and we probably could do that, but I mean you're down 3.5% on SPY, 4% on the Nasdaq in a day. I mean, you could bounce back 2% and then fall another 5% and still go way, way lower. The timing of exactly when it happens at this point, like the risk reward in my view right now, like this is not, when things are flushing out, it's not the time to get puts. It's not, you want to get puts yesterday afternoon. Going into this, it would have been a good play. Obviously looking back, go to hedge yourself going into the earnings. So the setup was actually hilarious. Just setting you up, kind of had a big rally going into the Apple Amazon earnings, had the mixed earnings, and then just a massive annihilation the next day. So anybody who felt comfortable and started buying in the afternoon yesterday is getting wiped across the board right now. Depends on when you bought. If you're buying shares or you're buying, time contracts, and who cares? You're fine. Let things play out. But geez, this has been the time to dump into long terms. Yeah, for sure. This is the time to be adding into long term portfolios. If you have stocks that you're fine with holding through whatever volatility you want to buy, because of course you can never time the exact bottom. So maybe the bottom comes in today, maybe the bottom comes in next week, maybe it comes in 2 weeks from now, maybe it comes in 6 months from now. I don't know. You're never gonna know. You're never gonna exactly time the bottom of that, right? Everyone thinks the Fed, this and that, is gonna be exactly when the bottom happens. No one has any idea. No one has any clue when that's gonna happen. So long terms. You have days like this, one of your stocks you like is down a ton, snag a share, I don't know, whatever price the stock is, snag a couple shares, grab, one share, grab fractional shares, whatever you can do. If you can, it's the time to do it. Portfolio is barely down, but I'm down in all positions. Perfect time to build. Yesterday was funny. Yesterday was a funny day, right? I think yesterday morning, the Webull portfolio was getting destroyed. Let's see, because XBI was coming down. XBI now getting hit now, obviously. But XBI was coming down massively. That was a pretty big hit. Then it bounces back up. went fat green. I did buy, not exactly this bottom tick, but when I saw XBI down 4% and SPY like roughly flat, I was buying a decent amount of contracts on my Labu position. So I added to those, and I didn't sell any of them. I'm not looking to trim. I'm not trying to flip them like that short of a time span, but I added to some of those, and yeah, they're up, I guess, from those buys, but now from where we're at, we could come off a bit more in the close. Can we get a SPY down 4%? Can we do it? I mean, you're just seeing like, stops being hit. Nobody, and no one wants to hold into the weekend is what it seems like. On SPY now. Look at this thing. 3.8% red. I mean, we haven't seen a day. I mean, I think, this is pretty nasty. We haven't seen a day like this. This has got to be up there as if not one of the worst, if not one of the, well, it depends on if we close this low. We could potentially bounce like $1 into the close, but it's got to be. But the headlines are going to probably read once the market closes. The headlines are probably going to read something like worst day in the Nasdaq this year. It's got to be up there. If it's not the worst, it's one of the top 2 or 3. We hit one of the worst a couple days ago. It's got to be up there. Let's see. What's a good stock long term? That depends on what you like. I like Tesla long term, but I don't like Tesla. I don't like buying Tesla right now. So that's an example of like, if Tesla was getting hit a lot harder, then yeah, maybe that would be a good opportunity. But to be honest with you, Tesla's holding up, Let's look at it really quick. Tesla is holding up, it's okay. He had 821 yesterday. Tesla, we're talking like a dip for Tesla. I'm talking like if we came down sub 700, then I'm like, okay, maybe stashing this away and forgetting about it is not a bad idea. But like up here, I don't know. It's been relatively strong, holding some decent strength relative to the market. But geez, man, I would have thought that we'd see Tesla lower given the current market environment that we're seeing right now. My guess would have been Tesla would be lower than where it's at right here, but it is what it is. Some stuff holds up, some stuff doesn't. Best time to buy is that the news talks about it on TV. When the news is saying this is down so much, or this is the worst day in X number of years or whatever, it's the time. But yeah, I mean, you have when you have like situations like this too. Obviously, it's not a crash. You want to say crash, whatever you want to say. It's not a crash. We're kind of like, again, more of a crash situation is the pandemic when you had such a massive drawdown. Like, yeah, it's the fourth red week in a row on SPY, but that's not really a crash. And in terms of the past 4 weeks, we're down a good amount, but we're down like, what is that? Like, we're down like 10%, almost 10% in the past like month of trading. I guess it's a good amount, but like we were down like 10% in a day back, or at least around that. We hit the limit down like 7% in a day on the pandemic crash. So it's all relative to what you want to consider a crash. So look at this. SPY 411.27 was the low of the day. Let's see if we can drop. We're probably going to drop below that. We're probably going to fall below that. We're probably going to dump in the after. Let's see, 409 is coming very, very soon. 409, the lows of February. On SPY, that's coming very, very soon. Worst SPY day for the year, it's probably up there. If it closes down 4%, I would imagine it's the worst day of the year. I just basically based off the past, it's only been a couple months. I can't remember a SPY close down 4%. We had days where it was down like around this amount and then it would snap back and rebound, but I don't remember a close this bad on SPY. Nasdaq, maybe different story. Nasdaq has been more volatile, but SPY, it's got to be up there. And then the Dow too. Look at the Dow. The Dow is down 3%. I mean, the Dow is up there in terms of this is probably one of the worst days on the Dow as well. Let's look at the Dow. I mean, if we look at these candles on the Dow, let's just zoom out for a second. It's got to be. I mean, there was Friday last week, I guess. Last Friday could have been worse. Last Friday was down 2.7. No, we're down 2.9. So yeah, we might have the worst day of the Dow. We might have the worst day across all three today. About 2 minutes, about a minute to go now. So let's see. 411.21 is the low on SPY. Jeez, man, this is why I didn't expect this to happen today. Worst month for the Nasdaq since 2008. Jeez. Yeah, I mean, here's the Nasdaq's chart, right? Let's look at the Nasdaq's past couple of, let's look at the past 4 weeks. Because you essentially started the month, like right here, yeah, pretty much like right in here. So like you were up here at like 14.6. Nasdaq drops 15, almost 16, roughly 16%. So yeah, I mean, yeah, broke the downtrend, fake out, and then dump further. Is what the Nasdaq did to us. Just bought the dip. Jeez. I mean, the VIX, look at the VIX, 34. The VIX actually has gotten a little bit higher the past couple spikes. It spiked up to 38. All right, so the market's now closed. My orders, I had a sell on one of my options that got canceled. Okay, so the market's closed. VIX has gotten up to about 38, 39 almost. Back here, was that back in January, 39? So VIX is up into, it's still got a couple more dollars to go technically to hit some of those highs. But sheesh, man. SPY with the dump city today. Let's see what it did. So, okay, it actually kind of bounced a little bit into the close. You ended up down 411.21 was the low. You finished the day at 412. That might be adjusted, but right now at 412.67 or 412.70 in the after hours, up 0.14. Again, the thing about this is that you have to understand the next couple of days. It's been that way this week, but the next couple of days, the same thing. You have to understand that the volatility that we're seeing right now, you better embrace it, or you're going to be freaking out. You know, I got to get in, I got to get out, I got to do this, I got to do that. Like, let this shake out. If you got big picture stuff, let it shake out, let it do what it's going to do. If you're trying to trade off of this volatility, it's, you know, you're just asking for it. So for me, what I've been doing is just giving time across a lot of positions, giving time and just not worrying about it. And then we'll see how this ends up shaping up. Let's just look at a couple other things. So oil ends up finishing here at 104.14. The 10 year is at 2.9, still just chilling. Over 3 is the key. But here it is. The Dow tumbles. I want to pull this up. Dow tumbles more than 900 points. Nasdaq drops 4%. It was actually more than that on Friday to close out a brutal month. And it's actually hilarious. Let me pull this up. Twitter, let me pull up this really quick. Not that I want to, this is not about, who cares? It's looking at data. It's funny, but you see how, data is cool until it's not. But this is interesting. This is fine. This didn't work out, but let me scroll down to find this from Ryan's page. I think he posted this I posted this back at closer to the beginning. Here it is. Well, this is cool, but whatever. That's besides the point. It was April. It was the April data. And I believe it was something along the lines of April has been one of the strongest months across the S&P, just historically speaking. So once I pull it, I'm coming down to April. Let's see. It was somewhere here. Here it is. No, that's the 10-year inversion. Here it is. Yeah, here it is. Out of the last 16 years, so now we, of course, rewrote this script, and now 2022 is red by a lot. By not a little, by a lot. So the stocks have gained in April on average 3%. Well, we did not do that. We actually ended up closing out March. Let's look at it. Roughly on the S&P, we closed out March at right here at like 458.50. And we ended up finishing this month, because I think next week starts May's trading, right? So we finished the month down 10% on the S&P 500. Obviously, we bounced, right? But it's not like it was 10% from already being down. We did bounce back a good bit, but sheesh, that's a nasty, nasty, nasty look. My guess, lining up for McDonald's applications. I might need to submit mine soon. Gonna buy some NIO and Tesla. I don't know. The thing about NIO is I do like it. The problem with China is I don't know what's going on with China right now. So honestly, Tesla for me is a good long term, but I would love it lower. Honestly, I would have liked Tesla to be a lot lower than where it's at now, but it is what it is. NIO, sure, but it's not like I wouldn't go super, super heavy on it. Just let it do its thing. Let's see how this plays out. It could be a good time to buy some of these Chinese stocks. I'm not sure how this ends up shaping up longer term, though. So we'll see how this stuff goes when it comes to China stuff. QQQ calls pan already. Picking them back to previous lows and after hours, but still gap up Monday. Too much of a sell-off. Dude, I need a beer too. I think so, man. I think so. No, but yeah. Again, when you see a move of this caliber, this is a massive flush. a massive flush. Like, do you like just think? Do you in the moment? Everything is coming down. Everything is freaking me out. Oh my God, I gotta sell. I gotta do this. I gotta buy. Whatever you're thinking. But like, does the risk reward on buying puts right now? Does the risk reward make sense? In my opinion, I don't think it does. I mean, the risk reward to buy puts would have been yesterday afternoon, and would have been back at the end of March. Those would have been good times to grab some puts. If you were looking at puts, even if you thought we were going to fail and we're going to fall down to, whatever on SPY, 350, whatever you think, doesn't matter. If you think this way, you're putting yourself in a better risk reward. If you're buying it here, even though you still may think we're going to see 350, you're buying puts at the lows. You're buying puts into areas we've bounced the past couple, bounced last month around this spot. So we'll see if we bounce again. Might not. We might. But even that, in March, we did come below the January lows. Everyone's like, I don't think we're going to come below the January lows. Well, we did come below the January lows, and then we ended up bouncing off of hitting new lows. We bounce. So maybe we come below the March lows and do the same thing happens and we actually bounce. Like, you know what I mean? So there's the bounce opportunities. If you still think we're headed down, are the better times. And you guys know my thoughts. If we see a true like big time move up, pushing all time highs again, that's the time in my view that I really would start to hammer the short side or really get out of everything long. Not right now, but if we saw us back up into the upper fours, maybe that was the mistake. Maybe we end up going lower, and it's what it is. But my time to go on the puts and go all cash would be if we're up here 500. The thought process is up towards 500 plus. We'll see if we ever get it this year. Drank bourbon last night, yeah. Oh man, rather stock splits happening this summer for bigger cap will bring a full. I don't know if it has to do if it's a big deal, but Tesla splitting, I believe, right, and Google splitting. I don't know how much of a player that really will be. Let's look at Amazon today. Amazon must have had a massive sell-off too. Actually, no, it ended up bouncing a bit. So it's funny. It did actually. Well, the market really just plummeted the last hour. Amazon actually bounced the last hour of the day. Interestingly enough, if you look at SPY. That last half hour, even of the day, was just brutal. Even the last 20 minutes was brutal. Bitcoin 25, Nasdaq 17 the next 3 to 4 months. I think it's definitely I think it's honestly a popular opinion. People don't want that, I guess, if you're long term. I think it's a very popular opinion. I mean, if you look at this, this would tell you it's actually quite the popular opinion. No one is very bullish, at least on the S&P. Nasdaq and Bitcoin, I guess, is a slightly different story, but they've all been playing, to be honest, in the same realm in terms of their direction. But that's not an unpopular opinion. I think it's actually it's quite literally the popular one for now. I do think you have the Bitcoin bulls, and I think I saw a stat saying millennials own more crypto than they do stocks right now. I mean, to be honest with that stuff, I think one more. For me, I'm not going to short anything here. I don't really care. But if we did get a Bitcoin move up, my thought was a move over 50K again. Here's the spot. Bitcoin, I'm looking at, here's the chart. I want Bitcoin up into this box. If we get Bitcoin up there, I would be looking at shorting some of the miners versus the highs. But let it play out. And if we get it, we get it. But if not, whatever. We don't get it. We need financial education in schools. No, that's the thing. We definitely, that's one of the biggest things you definitely do. I agree with that stuff. Just like there are probably a lot of other things that they don't teach you in school that you need to know. But basics on when it comes to just basic financial education, basic investing principles. Some of that, some schools, some teachers, I guess you learn that stuff. But to be honest, no, not really. And then I would say understanding taxes, understanding credit, because they're two big, huge parts to the current world we live in. People don't understand what taxes are, how they pay taxes, how you can let's say minimize taxes, but what you can do, write-offs and all that type of stuff, what can cut your tax bill. So people need to be understand of how that stuff generally works and legally what you can do, and then people need to understand credit. No one understands. The biggest thing people in high school and college, it's get yourself a freaking credit card. I know some people are super against it, but just get the stupid card. Don't put your Spotify, put your Apple, whatever your Apple Music, put your $2 a month charge on there, set it to auto pay, and then use your debit card for everything else if you're scared. But literally, that's what kids need to do. When they're in college, high school, once they're old enough to be able to get a card. without being, or you can put them on, as an authorized user on like a parent card or whatever. I guess you can do that too. But if you're not relying on your parents, again, just like stuff like that, because it's going to play a big role. Like later on, having a 750 plus credit score is going to open a lot more doors for you when you're 25, down the road. But you can set yourself up for that simply by, opening a card and paying on time, from 18 to 25. But if you open up at 25 or you have no credit at 25, it's a different story. That's a big thing, at least if you want to get into that stuff. At least that's my take on that, how that stuff works. I think so. Wild week in IPOs. There was some stuff. Big week. Awesome. Glad to hear. This is a big week. A massive, massive week for the Webull portfolio. I would love to say it was up, but obviously you guys know it's down with everything right now. But I used the opportunity to roll some stuff out. We shall see how it shapes up in the coming weeks. That's still, the thesis is still there. I'm still letting things play out. I have no intention to jump ship based on the tape, based on the day-to-day action for right now, until something else presents itself that I didn't see coming, or until there's a real reason or the real reason to believe that we're just going to be chilling here for a while and it's time to cut what I got. That's the plan. Took a business class, high school, and the best class I ever took. Talked a little about stocks. No, that's good. That's good to see. What's a good price for Bitcoin long-term? I don't know. Honestly, for me, Bitcoin long-term, I don't know. I have some, but I'm just holding it. If we did get up into the 60K range again this year, then I'd take it off or take a good chunk of it off. But I want to see under 30K. I mean, realistically, I think we can see if we get under there, I would be starting to buy it, maybe just dollar cost averaging in. That's what I want to see. So we'll see. Another thing to note too, these sell-offs for everyone, and we'll see how it shapes up. By the way, SPY in the after hours just bounced back like about 0.5%. I didn't touch. I mean, I technically could buy a call or whatever, a put if you wanted to right now. You got 4 minutes to go. I'm not going to touch anything. I'm going to let it go. My gut tells me we could gap down, but based on how much we were down today, I could totally just see a gap up too for whatever reason. Like, we're at a point where it's like this chop is just going to chop. The reality of these types of moves, when you think you're at a bottom, generally speaking, it tends to last and drag on just long enough to get you to finally think that it's done and I gotta just reverse ship. And the same thing at a top. When you're at a top, it holds on just long enough, if you're shorting, just long enough so that you're like, oh, maybe I should stay in. Maybe I should stay long. Or maybe I should grab something more because I think we're going to break out to highs. It holds on just enough for that type of move for you to do that, and then it will reverse. Now, obviously, that's just a generalization. That's how just generally things feel. So just as like we're seeing SPY right now, if in 6 months it was the complete opposite and we bounce back up and we're at 500 and we're like, no way, it's gotta die. Everyone's super bullish. It's gotta die. It will probably end up holding on just longer than you think, just long enough to the point where you'll end up screwing you. You'll get out, or you'll stay long and you'll get caught in the downtrend back, or you'll get caught in the crash, or you'll get caught in something. So that's how this game tends to work. Big picture, I guess. 25K or consistently buying over time on Bitcoin. Yeah, I mean, I think that may be a better. I mean, for me, I want to see under 30K, and then I think at that point, I think it could definitely have the utility could certainly be there. I think it definitely can, but if you're going to look at the short term, you're going to have that volatility. So who knows? For me, it's like now is not a terrible time, to grab some. It's down relatively speaking, but it could certainly go way, way lower in my opinion. So we'll see how that shapes up, and regulation news and all that stuff will be a player in that space as well for time to come. So we'll see. Got a 428 call for May 6th and puts on UVXY. I want to say that could work totally great. The problem is it is a May 6th. The risk, high reward on that. That's the reality. The thing with the SVXY for me, SVXY, where is it? SVXY. This is the short volatility. I think we can get up to that. That's the target that I have to go to break even, but I have May 20th. So I gave myself 3 weeks, right? On that, if we get a quick bounce back, it could be a quick take profits and move on. and or maybe I have 3 contracts, I can sell 2 and then hold 1, whatever I want to do. That's the idea. And then for the SPY calls, I have June 17th. So I get plenty of time on those is what I gave myself. They're going to be quite, they've been quite volatile the past couple of days. I mean, those SPY calls, let me pull them up. What do we got? Yeah, nasty. This is a nasty week in the portfolio, obviously. But these SPY calls, 80 cents, what they finished at. So I have a 134 average. I mean, like the range this has been in this past week, alone. So you have, let me go and zoom into a better time frame. The range of the past couple of days, this thing has gone from 230 yesterday afternoon. It's down, what is it now? Down 65% today to 278, 280. Just as, and just before that, what did it do? The thing went from 98 cents to 228. So it went 130%. So like off of just a 1 day move, so it's going to be that volatility. As long as you can, if you have very short term expirations, you got to be quick to take profits. You don't want to be like, I want to hold for a bigger move. You see gains, you take gains. And if you have longer term, you could let things work a bit more, but you still want to be proactive. So I'm going to talk about that in the portfolio update tomorrow's video of my plans. But for the most part, just as a quick little, play. The Labu 15s, I have Labu 15s and Labu 10 strike. They're, they look way out there right now. Oh my gosh, like there's no way, right? Whatever. But I don't really care. The reality is that the 15 strike is the farther one out of the money. So that's the one that is at the highest risk of expiring worthless right now. So these are the ones, they're for the same date. So whatever. Maybe I wanted to go further out. Maybe I could have gotten a different date. It is what it is. Those are the first ones. I'll take profits. So however many contracts I have, if we get a bounce, we get a pop back up to 10 plus, that's where I'll be looking to take something off the table first, and then let the 10 strike work for me because those are the least risky in terms of, expiring worthless, at least. I suppose at 419 when I got it. Jeez. Lambo or second job? Yeah, exactly. Now, yes and no. I mean, the reality is that this is going to be, the market will be here for years and years and years, and so it's not like it's going anywhere. So long-term investing is long-term. You can long-term invest. If you get burned in the short term, right, it's market tuition, and it's a lesson to be learned for the future. But the way I see it is this. I think we're at a very interesting and very crucial inflection point right now. And I think that if we see what I think we could see in the next 6-ish, I don't know. I'm saying 6 months, maybe it's 2, maybe it's 8, maybe it's 12. I have no idea how long things get prolonged. Usually things prolong longer than you think, usually, but I'm not here to time exactly when things are going to happen. But we seem to be at an inflection point right now. Obviously we could go lower. Obviously we could go higher, and we'll get that answer, I would imagine, quite soon. We'll have a much better picture on that. But my intention is that once things start to kind of calm down, as we say, a lot of money can be made off of these inflection points, whether you're right or wrong. Obviously you can lose a lot of money. But once we kind of calm down and see some sort of normalcy, that's when I want to really kind of change the style of this portfolio, make sure we have the other portfolio. I'm going to do the cover call portfolio, have some dividends working there, and then week to week be mostly cash in the Webull. I want to be a lot more cash and use that as just a short-term swing, like small cap type of swing, like, okay, shorting this or going long this. But very, very small swings overnight, but for the most part, day trade opportunities. That's really it. Looking for outlier moves and taking advantage of day trade opportunities where we see them. If we see them, if we have a choppy day, if it's a slow day, there's no need to do anything. You can walk away. But that's the intention of the portfolio. Whether that means we go with a 10K cash account, whether that means we go with a 50K margin account, I don't know. I don't really care, right? We'll do whatever. The reality is it doesn't matter. You go to a cash account, you can still day trade options and whatever, and it's fine. You go to a margin account, okay, at least you're not on, stuff settles right away, whatever. You can use. I don't use margin anyway, so there's benefits to the margin account, but it doesn't matter. I always recommend people, if they want to get into, like, if you want to like day trade stuff, but you have less than 25K, get a freaking cash account on Webull. And if you're playing options, especially, those things settle next day, so you're chilling. Like you're good on that stuff. S&P 38 mid-May market setup is similar to how it traded in December 2018 when it flushed, but it's possible. It's possible. But I mean, the thing that's interesting to me is that the biggest interest in my view is this. Obviously, this could be wrong, but this sentiment for me is very, very telling. We'll see how it shapes up, and also, I I had this pulled up because I think it was funny. This is another one that's funny. Just the underlying story here, like what's going to happen. Because here's the thing. We're talking like big money. For us, no one cares about us, right? We're the little guys. Who cares if you lose your money? Yeah, you lost your portfolio. That sucks for you. What's going to happen here? Like, does this close down? Like, what is ARK going to do? Where is ARK at right now? They must have had a nasty day, right? I would imagine. ARKK, let's see. ARK finished down 3.5%. Actually, hit a lower spot yesterday a little bit, actually. Okay, but ARK is at a point where ARK is almost, you're still about $15 off. You're almost at the pandemic lows. Like, you know what I mean? This does have some similarities to that 2018 type of look. It certainly does. And the thing about that, this is on ARK though, so it's not the best example. ARK pulled back about 27% in that 2018-2019 span. You're talking, how much is ARK down now? From the highs, you're down, oh my God, 70%, 71% from the highs. That's nuts. Absolutely nuts. You're almost at pandemic lows. I guess we're at a point in time where, we are at like, a pretty crazy time in the market. So there's that. But so you're going to see the volatility here, but like this is just, to me, this is just nuts. This is nuts. But she's not backing down. From all I've seen, there's no backing down. There's none. There's no backing down. This is what I'm doing. I'm buying these stocks. I don't care. So maybe the thought is here, if we do go through a bigger picture bear market, maybe the thought is here, like, okay, like I'll hold through, and the ARK goes to 10. Like, I don't know, maybe ARK goes to 10, and then it goes from 10 to 100 in the next 5 years. I don't know. I don't know. I really don't know. But like this is an interesting underlying storyline here because it's pretty nasty. Let's see. 100K inheritance for retirement. How would you invest in the current market? I would say right now in the current market, there's a lot of deals. We could go lower. We could do a lot of things. There seems to be a lot of deals. I'd be a little bit, if that is your money that you're using to retire, I would say a great way to play with that would be to buy stocks that you like and that you want to hold for the next 5 to 10 years, and then sell covered calls against your shares. So maybe that's a stock like, I don't know, maybe it's ARK. Maybe you do like ARK and you're saying, yes, screw you guys. I'm buying the dip on Kathy. I'm buying the dip. Maybe it's individual stocks inside of ARK. Like, again, maybe you like as terrible as it sounds, like Teladoc, I don't think is like done. Like, I would like to look, I guess you can look deeper into their financials and stuff like that. But like the reality is Teladoc, that's where we're going. Like, telemedicine, like that's where we're going. Like, everything's online. We're going that way in the future. So maybe Teladoc, honestly, at this point is not a bad buy down at like whatever it's at. Teladoc down like 90% from its high, something like that. Like, I don't even know what it's down massive. Like, maybe Teladoc is honestly not a bad idea, down here. So on 100K, you can buy a crap ton of Teladoc, and then you could sell covered calls against Teladoc, the covered call wheel strategy, just rotate covered calls and then cash flow from that. So now if Teladoc goes up and hits your strike price, boom. I would look up selling covered calls. Look up what that means. If you're not sure what that means and how that works, I would look it up because it's a great strategy. And then from there, you can just rotate around those covered calls, blah, 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 and then cash flow. So you can cash flow every week on selling weekly options or sell monthly options, whatever it is. Cash flow. And then if it hits your target and it takes you out, okay, well, maybe let things relax, or go find something else that's beaten down, or let it pull back and buy it back and then do the same thing again and keep playing that game to keep cash flowing. And once you have a decent nest egg, right, and 100K could be a decent enough nest egg for you to do that and actually cash flow enough to survive, maybe not survive, but like make a few bucks a year, off of that, make, a couple $1,000s a year. It could be, a good amount. It could be, maybe more like 25, something like that, 25K a year based off of that strategy. It's possible. It's very possible on a very conservative approach. So that's that. Wheel strategy, ETFs, a few stocks you'd like. Yeah, keep it simple. I also wouldn't say put all your money into one stock. You'd want to diversify there. Obviously, it would be a risk. But yeah, a couple stocks, some ETFs that hold a bunch of stocks that you're diversified by the ETF. Sell covered calls, all that good stuff. Seems like Polestar seems like a great long-term investment, like Tesla. It's possible too. ARK, disruptive innovation, disrupting from making money. Yes, I mean, here's the thing. The reality behind some of this stuff, though, is that this is going to have. Obviously you're in a market right now that doesn't care, but like this time again will pass, whether it's in a year, whether it's in 6 months, whether it's next week, I don't know. This time will eventually pass, and a lot of this stuff that's been sold off massively will do well, and I think even Tesla in that group will continue to do well longer term. So I don't think that it's done for. I think obviously if you had not ever looked at ARK, I think obviously right now wouldn't be a darn bad time to start looking at it and maybe picking something up. Not like going all in, but just picking something up if you agree with the stocks. Like if you don't agree with the stocks, then don't do it. But if you do like I don't understand Roku or Zoom, to be honest. I'm not a big fan of those two. But like Coinbase could be a longer term. Obviously, if Bitcoin comes down, the short term, maybe you can get a better average than that. So whatever. But like Block maybe could be one. Unity Software could be one. Maybe Teladoc. I don't know. Maybe Teladoc is one now after the big dip you like. Maybe Shopify is another one too. I don't know. DraftKings is up there too. I think that's actually not a bad idea, to be honest. I like DraftKings, to be honest here. Roblox could be one. Go and hand pick a few of those, and instead of buying ARK, buy a couple individuals that you like. Obviously if she's somehow right across everything that you don't pick, she'll outperform you. But if what you can kind of pick and choose actually ends up working out and you can beat her on that, then yeah, you'll beat her ETF and you'll do better. So it's all game. It's honestly a lot of fun to play the game, but it's all a game at the end of the day. Buy one share of SPY every Friday to get a great average until you run out of money. It's not a terrible. If you did that the past 2 Fridays, would have gotten some good deals on SPY. You would have gotten some pretty nasty red days. So that said, I'm going to wrap things up here. We had 3. This is now the 4th red week in a row on SPY, which we actually have not seen this year. Here's the weekly chart. We have actually not seen 4 red weeks in a row on SPY. I think the Dow had 5 red weeks in a row back in March, and the Dow also just hit its 5th red week in a row just now. So the Dow is not down towards the March lows. Actually, it's a decent amount off the March lows, whereas SPY is essentially like right in line with the March lows, and the Nasdaq has actually come down below the March lows. And it makes sense why. It's because the 10-year is up here. And now look at this, the 10-year, 292. So the 10-year, just as we were talking about, it dipped a little bit this week, but now it's popping back up. We might get a test of 3% next week. And if we do, I would imagine we see more pressure on tech. We shall see. That's something to watch big time going into next week. Appreciate you guys like always. Tomorrow's should be a nasty one, but we'll recap kind of the week and all that stuff in tomorrow's video, and we'll recap the portfolios, moves. It'll be pretty straightforward. It's going to be, pretty straightforward. The portfolio is a high risk, kind of reward portfolio, so it is what it is, and that's the nature of it. And we're riding with it for now until we need to take the L, but we'll see how it plays out. That's it. Appreciate you guys like always. I'll see you in the next one. Have a great weekend. Peace out.